And so now I would like to introduce Linsay Clark. She is the Chief Borrower Advocate and Director of External Affairs at Savi Student Loan Services. And Linsay's been on quite a few times. She always does a really great job at wading through all of the technical things that are happening with student loans. It seems like it's just nonstop over the last year or two. And so with that, I'm going to hand it to Linsay so she can get us started. Linsay?
Great. Thank you so much, Ellie. And it's a pleasure to be back with everyone at NHRC. Always appreciate these opportunities. As Ellie mentioned, my name is Linsay Clark, and we are going to be diving into all of the things that have been going on in the world of student loans. We can go to the next slide. So just a quick look at what we're going to cover. I'm first going to do some brief introductions of myself, the company I work for, Savi, and the nature of our partnership with NHRC, and the ability to provide access to some pretty incredible tools and resources that can help, not only you all individually, perhaps, but members of your community in tackling their student loans. And then we're going to dive into sort of the meat of this presentation, which is really going to focus on some of the more recent and major policy updates on student loans. So more specifically, the SAVE plan lawsuits. The SAVE plan is the newest income-driven repayment plan that was introduced by the Biden administration last summer and has since run into some challenges on the legal front. And those challenges have had implications for borrowers across the board who are trying to enroll in the program and who are enrolled in the program. So we'll sort of give you an update on what's going on. We're also going to talk about the on-ramp to repayment that is coming to an end September 30th. This is a big deal because this was essentially a safety net for borrowers returning to repayment last year. We're also going to talk about the Fresh Start program coming to an end. Again, that's also September 30th. And this is a program that helped get people out of default in about 10 minutes or less. So we'll go into more detail because I know that there are still millions of people out there in default who could take advantage of this program. And then we're also going to talk about some of the new forgiveness initiatives that have come out recently, from the Biden administration, as well as some improvements to existing forgiveness programs that are going to make them more accessible and more borrowers eligible. So we'll go into more detail on that. And then we'll wrap things up by showing you exactly what this sort of Savi student debt navigator is and how it can be helpful for all student loan borrowers in navigating through these programs going forward. We can go to the next slide. So again, my name is Linsay Clark. I'm the Chief Borrower Advocate here at Savi. I've been with Savi since it was founded back in 2017. And my role as the Chief Borrower Advocate is to understand what is happening in the world of student loan debt, but more specifically, how that is impacting borrowers on a day-to-day basis, and make sure that our product and services and how we are communicating and educating with borrowers is reflective of that, but also helping to protect and advocate for their needs and elevating those voices to hopefully make a better system. I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. I say this because, I want people to feel comfortable in talking about this topic. I know that there can be some stigma. Maybe it'll make you feel better about your own student debt situation compared to mine. But being a borrower really informs how I communicate about these topics because they are overwhelming and complicated, and trying to reach borrowers where they are and really explain these things in a way that's going to make sense is important, and ultimately has an impact on someone's student debt outcome, for better or for worse. So my goal today is to hopefully capture the most important information for you all, help you feel more empowered about your own student debt perhaps, and leave you with some takeaways to bring back to your community. We can go to the next slide. And so I work for Savi, which is a social impact technology startup based in Washington, D.C. We were founded by student loan experts and advocates who've been fighting on behalf of the borrower for more than a decade and realized that many borrowers were never crossing the finish line around their student loan debt because they were struggling to navigate these really complicated federal repayment and forgiveness programs. So we decided to do something about it and develop Savi as a technology platform and a human service to help borrowers like you and like me not only better understand our student loans, but to successfully navigate from start to finish, but along the way, make the experience of being a student loan borrower a better one. Because I think whether or not you have student loans, we can all agree it's not a great experience. And so we try to do that by identifying as much additional savings as possible through things like income-driven repayment plans to help make that month-to-month easier. We like to say that borrowers, not their loans, are our top priority at Savi. There are a lot of companies and entities in this space whose focus is the debt. They make money off of servicing the debt, and that's not who we are. Our goal is to service the borrower and make sure that their needs are looked out for and protected. And so on this next slide, that brings me to why we're here today, which is we've had the fortune of working with NHRC for many years now. Actually, this was one of the, I think, the first partnerships that I was a part of back when I started. And we're so lucky and proud of that because Savi doesn't offer our services and tools to just anyone. We offer it through unique partnerships like this one as an exclusive student loan benefit. The reason we do that is because we think it's really important to have a trusted messenger. That trusted messenger is NHRC to be able to help us reach those borrowers where they are. So we're excited to be able to offer this to you all. Again, as Ellie mentioned, there is a discount for NHRC members, a significant discount, I might add. And I think that is important. We work with a variety of partners and organizations across the country. But again, our goal in working with these organizations is, again, to help deliver the best outcome possible for each and every borrower. All right, so with that said, we can dive right in and we are going to talk about this SAVE plan first, which stands for Saving on a Valuable Education. We can go to the next slide here. And again, this is the newest income-driven repayment plan that was introduced by the Biden administration and Department of Education last summer before payments were set to resume for the first time after a nearly 3+ year pause due to COVID. And the whole goal and intention behind releasing this plan was to introduce the most affordable repayment plan yet. All right. And hopefully lower monthly payments as much as possible, recognizing that many borrowers were going to struggle in returning to repayment after not having to make payments for over 3 years. So a couple aspects just of this SAVE plan that make it unique and make it more affordable. So the first is that they cover any unpaid interest. So if you're enrolled in the SAVE plan, and your monthly payment on that plan is not enough to cover interest alone, that remaining interest that would normally be what's called capitalized and added to your principal balance is not. It is actually now subsidized. And what that will do is it will prevent balances from ballooning, right, over time, and situations where borrowers have been making payments on their loans for years, if not decades and more, and their balance is not lower, it's not decreasing, it's actually higher than when they started. And I can certainly attest to that because that is the case in my situation, and I know many borrowers feel that way. So this will at least prevent that issue from continuing. Another aspect of the plan is that it's making those monthly payments more affordable because it has basically decreased the percentage of income that it's going to be looking at when calculating that monthly payment amount. On an income-driven repayment plan, that monthly payment amount looks at two things: income and family size. And so based on that income, higher or lower, right, that's going to affect whether or not that monthly payment is higher or lower. And so what this plan has done is it's looking at a smaller percentage of that income such that no borrower making less than $15 an hour, about $35,000 a year, will have a student loan payment. Their payment amount will be $0. And now for borrowers making more than that, their payments will still be reduced. Um, Borrowers that are eligible for the SAVE plan include everyone with direct loans. That's a type of federal loan out there. The only group of borrowers that are excluded from being eligible from this plan are Parent Plus loans. And unfortunately, this is actually the fastest growing demographic of student loan borrowers. It's parents taking out loans for their kids. So we are actively working with some of our advocacy partners to try and push on having Parent Plus loans included in SAVE plan eligibility, but for now they are not eligible to enroll. But most all of the borrowers should be eligible for this plan. All right, if we can go to the next slide. Now, while that all sounded fine and well, and this plan was introduced, at the end of last summer, and borrowers could start enrolling then, and they did, and up as of right now, I believe about 8 million people are currently enrolled in this SAVE plan. Unfortunately, a couple months ago, some lawsuits came through that threatened the future of this plan and the ability to continue implementing it. And so there were another wave of improvements to the SAVE plan that were scheduled to start July 1 of this year. And those improvements included reducing the percentage of income that they were looking at to 5% for undergraduate borrowers. So that would have cut payments further in half. And borrowers with loan balances under a certain amount were actually supposed to qualify for forgiveness on a shorter timeline, 10 years instead of 20. So these were the two elements that were going to go into effect starting July 1. However, as a result of these lawsuits, they have had to put the entire SAVE plan on hold. So not only did those elements not go into place, but there were broader implications as far as the ability for this SAVE plan to continue to operate. Now, what does that mean for borrowers? Well, a couple of things. And this is as of today, Thursday, August 29th. This is the latest update. We actually just got more information in the last 2 days. So just goes to show you that this is sort of a very fluid situation and changing, day to day, week to week. But in response to this, the Department of Education has done the following. So any borrowers that are already and currently enrolled in the SAVE plan, okay, are going to be placed or already placed in an interest-free forbearance, meaning they will not accumulate interest right now, and they will not have to make a payment. So if they look at their account, their payment will say $0. Okay. And anyone who enrolls going forward, at least right now, into the SAVE plan, will also be put into a processing forbearance for a period of time as well. So just as an update specifically on, trying to apply for SAVE or those borrowers already in SAVE. Now they will remain in this forbearance until there is some resolution to these lawsuits one way or another, because the Department of Education legally cannot implement the program, which means they legally cannot have, these student loan servicers actually collect payments under that type of program right now. Okay. So another element to that has been they have generally paused the processing of any new applications, whether to SAVE or other income-driven repayment plans, for the time being. And they have removed the ability for borrowers to apply online. So normally at studentaid.gov, the official website of the Department of Education, you could enroll and SAVE in other plans online in about 10 minutes. That has been taken down. Okay, for the time being. So borrowers can still submit an application to enroll in these programs, but it can only be done by paper application. So, downloading that PDF, filling it out, and they can only fax it or mail it to their servicer, which is not ideal. However, I'm going to show you a little bit later on how Savi actually, our product was built around these paper applications. We digitized them essentially. And so borrowers are still able to submit and enroll through using Savi without interruption. So that's, I think made it even more valuable, some of the resources that we're providing right now, because otherwise borrowers would only have the option to try and do this by hand and mail or fax that in, which, seems somewhat unreliable. So again, you can still submit that application to enroll in SAVE or other IDR, but it will experience a delay in processing, and you are likely going to be put into a forbearance for at least the foreseeable future, right? Now, what happened as of a couple days ago when the Department of Education released some more guidance as a result of these lawsuits is that they have now limited enrollment into other income-driven repayment plans. So as of today, borrowers can only enroll in the SAVE plan or the IBR plan, income-based repayment. Enrollment in two other income-driven repayment plans, Pay and ICR, has been limited to people who have been on that plan. So there are no new enrollments being accepted at this time. I know we're talking a lot of technical jargon here, but all to say that this is something that is going to have a material impact on people's ability to navigate this system, and it is changing from day to day. And so, one of my roles, but really the values in what we try to provide to borrowers is, we're going to be the ones that can communicate around these important updates to borrowers and assist them in navigating and taking any action they might need to, because again, it's changing from week to week. But that is sort of the latest as far as the SAVE plan right now. I will say last thing on this is that, it's going to the Supreme Court, and whether or not the Supreme Court hears this sooner rather than waiting for its typical schedule, which would be next, May, June, we have yet to find out. The department is pushing for sort of an emergency hearing, but I am doubtful as to whether we are going to see this or any resolution, I should say, before the election, I'll be honest. So again, this is sort of what is happening right now. And at least borrowers are able to be put into a forbearance and not responsible for those payments, for the time being. I'm sure we probably have some questions before I move on to the next topic. So Ellie, if any have come through, please let me know.
Yes. So let's see. For the income, $15 an hour, does that apply to the borrowers only working part-time or seasonal making more than 15 an hour, but average out through the year will be lower than 15 an hour?
Great question. So when it comes to calculating income, as part of the application, you need to provide documentation attesting to your income. And that can either come in the form of your most recent tax return or a pay stub from the last 90 days. Now, to this specific question, and borrowers are able to decide which one they want to submit. Now, for especially for hourly or seasonal, right, where someone's income is changing maybe from week to week, month to month, right? I recommend using a pay stub because it is more representative of what maybe that income would be at that point in time, but it also allows them to potentially try to take advantage of that in lowering their monthly payment, because let's say there's a time maybe when they're seasonal and they're making more than they normally would. If you submit this application and use a pay stub from a lower period of income, the Department of Education uses that pay stub and that amount and extrapolates it out over the year as your yearly income. And so that is a way to significantly perhaps lower what the calculation for your monthly payment would be, right? Rather than using your tax return, which would be reflective of the entire all of that, right? So in those situations, I advise on using a pay stub, and there's no limitations or restrictions on if someone is hourly versus seasonal. Again, that you can choose sort of at what point in that year you want to submit that, and what sort of proof of income you want to use, if that makes sense.
Okay. A couple more questions. So questions now are popping in because you have said, are there questions? And so people are asking questions. So so at this time, consumers can still apply for the SAVE plan. And is it household or individual income based?
Great question. So yes, they can still apply. Again, they cannot apply online. They can only do it through, paper application, as I mentioned. And when it comes to that income, they look at your tax filing status. That's what it's based on. So if you file as single, it will look at just your income. If you are married filing jointly, it will look at joint income. If you are married filing separately, it will look at just your income. And if you are head of household, it will look at just your income as well. There's also a sort of fourth or fifth final option there, and that is I am married but do not have access to my spouse's income for my student loan debt. And that is just a vague blanket statement that's in that question. And many borrowers say, well, yes, I am married, but I can't use my spouse's income to pay my student loans. And by selecting that, then it means that it just looks at their income. So those are that's how they break it down when on this application to determine, what income they're going to look at.
And along those same lines, with income information, do the pay stubs have to be recent and consecutive?
Nope, it just has to be one and from the last 90 days.
Okay. And then along, this might be a good segue to your next section. I'm not sure, but along with income-based repayment, what are the other income-driven plan that is open for applications?
Yep. So, as I mentioned, Save, and as of right now, there's another income-driven repayment plan called income-based repayment. It is not as I would say affordable as Save, meaning the percentage of income that it's going to look at is slightly higher, but it is still going to be about 10% of someone's income that they're looking at when making that calculation. So it might be slightly more, but it's still going to be probably more affordable than a standard plan or something like that. But as of right now, that is the only other income-driven repayment plan that someone can enroll in for the first time. The two others, so there are 4 income-driven repayment plans total. The 2 others, Pay and ICR, have now been limited. So you're not able to enroll in those for the first time. They're limited to people who have already been in those programs. So if you have been on the Pay plan, for years going into this, you will be able to continue on that Pay plan, but someone won't be able to enroll in Pay, for the first time. Now I would say again, Save is the most affordable for a reason, right? And going to usually be the lowest payment across the board. So it's not as if someone is necessarily missing out by not being able to enroll in those other plans. But that's just, how things stand right now. Again, that could change, in the future, but Save and IBR, income-based repayment, are the 2 available at this point in time.
Okay, so here's a good question. What about those who did automatic deposits for IDR? Should they go in and stop it due to the pause?
Yep. So any auto debit that had been set up, if you were put into an automatic forbearance, that would have automatically been stopped. So payments would not continue to come out. They actually legally can't even process those payments. So if you were enrolled in Save, and if you looked at your servicer account, it should say you were on a $0 forbearance, and you should not have seen any automatic deposit come out. I would say to not necessarily remove that, because I mean, it obviously depends on someone's situation, but hopefully when Save is able to be, turned back on, or, payments can resume, you don't want to risk potentially missing that because, you didn't have that auto debit set up, but, totally a personal preference. But that forbearance, if you were on Save, was automatic. So there was, you didn't need to worry, or you shouldn't worry about those being taken out.
And somebody is asking if you could re-highlight the difference between IBR and IDR.
Yep. Oh, great question. So, and I usually have a little slide on this, sort of just a primer on income driven repayment in general. But so income driven ID or IDR is sort of the umbrella term here to describe these types of repayment programs. So you can kind of think of, IDR, okay, up top. And then below that, there are 4 different types of income driven or IDR plans. So there's the Save plan, which was formerly known as Repay. There's the Pay plan, PAYE, pay as you earn. There is IBR, which stands for income-based repayment, and ICR, which stands for income contingent repayment. Now, the differences between the programs really come down to some technicalities around, disbursement date, loan type, et cetera, eligibility. And the great thing about the Savi tool that I'll show you later is that we are able to, based on someone's basic information, detect, what is going to be their best option and exactly what those different payments will look like. But all to say that, IDR is sort of the description term here, and there are 4 different types of those income-driven repayment plans.
Okay, the questions keep coming in, but let's move on and
Okay.
we'll get to these at the end. I don't want to
No,
not
no
get to
worries.
all
That
the
that sounds
information.
good. Sounds good. Okay. So now we are going to talk about this on-ramp to repayment that is coming to an end again, September 30th. So we can go to the next slide. All right. So what is this on-ramp to repayment? So when borrowers return to repayment for the first time last year, October 2023, payments resumed for the first time since being on pause for nearly 3+ years. Back in March of 2020 is when the automatic payment pause began because of COVID. So October was when that officially came to an end, and those payments were going to resume. And so, in an effort to assist borrowers in transitioning back to repayment, and acknowledging that that was going to be difficult for many, if not most people who had not had to make those payments and incorporate that into their budgets for a while, the Department of Education created a 12-month, what they called on-ramp to repayment, that will last until, again, September 30th, as somewhat of a safety net, so that if borrowers missed their payment, made a payment late or a partial payment, right, during that 12-month period, they would not suffer the same negative consequences that they normally would for missing or making that late payment. All right. So more specifically, they wouldn't be reported as delinquent, or they wouldn't even be able to go into default as a result during this period. So that was sort of their way of providing that safety net and protection. Knowing that absolutely could happen. People are going to miss those payments, not be able to make them, but they're not going to be dinged like they normally would, and borrowers are not going to fall into default during this period like they normally would. Now, delinquency and default, you can become delinquent on a missed payment after that first missed payment. All right. And then after 90 days, that gets reported to the credit bureaus. And if you remain delinquent for 270 days or more, you go into default, the official status of default. At which point, and we'll talk about this when we talk about the Fresh Start program, at which point you're essentially moved to a almost like a collections agency. You're not able to enroll in income-driven repayment plans. You're not able to qualify for forgiveness. And you're not able to get any new student loans while you're in that status. Now, I will say, and this is something, I wish wasn't the case, but when you are in default for a long enough period of time, the Department of Education, and this can happen within that first year, will move you to a more severe status in an attempt to now aggressively collect on that debt. And that includes wage garnishment. So they will basically take 15% of every paycheck right away. You have no control as the borrower. It is out of your hands. Or they will garnish your tax refund, or they will garnish some of your Social Security. That is a status and a stage you do not want to get to, because it is very, very difficult to unwind and to get out of something like a wage garnishment. I've had borrowers who have actually had to quit their jobs because they cannot afford to continue there, because their 15% of their paycheck is going out the door. So all to say that, with federal loans, because they are federal, the government, they don't operate like private debt. The government is going to continue to come for those, okay, in perpetuity. And so they, with increasing severity. So again, that the on-ramp, right, during this period, if you didn't make payments for 6+ months or still aren't making payments, you are not suffering those normal negative consequences. but that comes to an end September 30th, meaning starting October, if you miss that payment, that sort of same machine and clock that normally does is going to start back up. And I'll say this, as of December of last year, so payments had been resumed for a couple months. Department of Education released data that said 45% of borrowers had not made their first couple payments. And they haven't released new information, but I'm fairly confident that is probably still the case. That many borrowers, whether as a result of this, knowing about this on-ramp, or just not even being able to make those payments, are still not making their student loan payments. So brings it back around to the importance of this, this September 30th date, right? Because, if it was something that they were not addressing for this past year, it's very important that they address it going into October. And even if that means simply getting an income-driven repayment plan application in, right, applying for SAVE so that they can be put onto a forbearance, they won't have to make a payment, right? But at least it's going to avoid them getting, going into delinquency, because they're just not making a payment at all. So this is something that, really, really important. And I think many borrowers need to be made aware of, because I think it's going to be we're going to see a high rate of delinquency and default come October, and many borrowers are just going to be unaware of this. So again, you needed to still make payments during this year. It's not like it was optional or, that you didn't have to. You should, if you could make your payment, you should. However, it was a safety net in case you didn't, you wouldn't go delinquent. So if we go to this next slide here, so just a few things on how someone can prepare, right, going into the September 30th date, and prepare to make sure that they avoid any of these starting October. So again, reviewing your loan details, right? Checking your balance, interest rate, due dates, making sure what servicer you have, that contact information is updated so that you're receiving communications, just sort of getting a pulse, checking back in with your student loan debt. Because I know for many borrowers, myself included, especially after that payment pause, just sort of student loans couldn't be further from mind. And I think for many borrowers, that's still the case. So again, now is worth sort of checking back in. And then, of course, exploring those repayment options, especially on an income-driven repayment plan. And, right now, getting that application in. And the good thing for many people is, you're not having to make a payment on those forbearances, right? No one hates not having to make a payment. So this is something obviously Savi, can and does assist borrowers in doing. And then starting to think through, how you can incorporate those student loan payments back into, your budget on, a monthly basis, knowing that you are going to have to figure, some way out of making that payment each month. Otherwise, again, going delinquent. And this really is where Savi comes through as far as helping someone explore those options in showing them sort of a personalized, plan as to what they're eligible for, and then making it really easy for them to enroll, that bias for action. And let's do this right now. Let's get this in, and then monitoring those applications to make sure, they achieve the desired outcome, and a borrower knows what's going on. So hopefully we can make sure as many people as possible are set up in repayment come October. All right, if we can go to the next one, I want to just maybe touch on this Fresh Start program because it's sort of related, and then I'll pause for some questions if that sounds okay. So another program coming to an end September 30th is this Fresh Start program. So if we can go to the next slide here. So the Fresh Start program, again, was something that came out of, this transition back into repayment last year, and, the ability to sort of help as many borrowers, kind of get back on the right track and right footing coming out of the sort of the extended payment pause. And so it's designed to quickly bring borrowers who are in default status right now back into good standing. So while I had just mentioned because of this on-ramp, right, borrowers, didn't go into default during the last 12 months, there are still, though, about 8 million people, I believe, who were in default status before that. So they were in default through the payment pause. Again, they weren't, being, that wasn't being reported. They had this on-ramp opportunity, but that default status didn't change. They still remained in that. And now the sort of, after September 30th, right, because of the end of the on-ramp, they will kind of get back into, experiencing those negative consequences once again. So what this Fresh Start program does is it makes it really easy. A 10-minute phone call, you can do it online in about 5 minutes or less, or you can submit a letter via mail. But it allows basically a borrower to say, I want to use the Fresh Start program to get out of default, and it will bring their loans back into good standing by the end of the month. Now, this is huge because normally when you are in default, the only way to get your loans back into good standing and get out of default is through a process called rehabilitation that takes 9 months, in which you have to commit to making 9 consecutive months of payments. And the calculation of that payment is an intense process in which you are trying to prove, here's what I can pay, et cetera. It's really involved. And many borrowers do not end up completing it successfully. So that usually is the only way to get your loans out of default. This, obviously is an incredible thing because it now is picking up a phone call and saying those words, and it's going to be a make or break, but life-changing as far as getting those loans back into good standing without having to go through that intense, long process. So it restores the access to income-driven repayment plans, forgiveness, taking out new aid, no more wage garnishment, collection calls, et cetera. And again, borrowers with defaulted loans across loan types are eligible, and all they need to do is opt in, which they can do via phone. There's also a website online and mail. And like I said, it takes about 1 month for the process to fully complete, but at that point, they're able to enroll in income-driven repayment. So it ends September 30th. And this to me really it's just such a life-changing opportunity for people in default, because one of the reasons why so many people continue to remain in default was because it was so difficult and an administrative burden and cumbersome to get out of default. And many borrowers who were, detached from their student loans to begin with and didn't want to pay them, that it made it even harder to try to get them back into good standing. So this is a way to really easily and effectively, change someone's life in that not only is their student debt brought back into good standing, and once October hits, they won't, their credit won't get dinged even more, and they won't fall into wage garnishment and things like that. But it's going to, allow them to, again, get those loans back into good standing. But it'll come off of their credit report as well. Being in default, being reported to your credit, it really is a ding. So it could improve someone's financial situation in about a month. So all to say, September 30th, again, is when this program comes to an end. So you'd need to take advantage of this before then. And like I said, it's very easy to do so. The Department of Education has a sort of an FAQ page with the number, the exact prompt someone needs to say when they call, as well as the website where they can do it logging into their account. But I'm hoping that anyone that you all know in default, you can make sure they utilize this before September 30th. Any questions, Ellie, but that you think we should take now before this is sort of the last sort of policy section before we talk about Savi stuff.
Yes. Yeah, there's a few. And
Okay.
I just want to say, so let's say I'm a student loan borrower that wants to use the Fresh Start program. Can I call on September 30th at 4 p.m. Eastern?
Yes. Yes, you can't. So you just need to initiate the process before September 30th.
Okay.
But I wouldn't wait that long just in case there's
right.
things like that. But
Yeah.
yes, it is a good question because these things take about a month to process, right? We get that all the time. Do I need to do it now in order to still make the deadline?
Right.
Good question.
And I will just say, it doesn't link to the website that you mentioned, the Department of Ed, but I did put a link in the chat to studentaid.gov, which is specifically about the Fresh Start program and how to link to the ways to request it.
Oh, amazing. Okay,
Um,
yeah, that's exactly what I was going to share. That page from studentaid.gov has all the information. It basically has a whole section. It's like 3 ways to contact us, right? You can go online with the link,
yeah, yep,
and
yep,
then mail. Yeah.
yeah,
And then
yeah.
it lays out, sort of what happens next, etc.
Okay. So somebody was just quickly in the chat asked about getting a picture of the last screen. If you, Christy can put the link to the PowerPoint in the chat again, but you don't need a picture, you'll have all of the slides, because you can just click the link to the PowerPoint. Okay, let's see. Can you choose to continue to make payments if you were in the save plan? And are there benefits other than reducing balance to do that? For example, PSLF or IDR forgiveness counts.
Yes. So this is a great question. So, if you are on Save, if you wanted to make a voluntary payment on your student loans, you could. You'd have to call your servicer to arrange to make that payment. However, it would not count towards IDR or PSLF progress because the servicers and Department of Ed cannot legally process it as a save payment, right? That is actually going to qualify for that. So you are able to make that payment, of course, if you want to. But it's not going to count towards either of those. And they may not even be able to process the payment until this hold is lifted. And at that point, if anything that you had paid will go towards future payments on the plan. But I would say for those that are, because we've gotten this question more than any other, the trying to continue to get credits towards whether IDR forgiveness or PSLF forgiveness, especially for those that are, reaching near or almost at that 120 qualifying credits while this is going on. I say this: there is something called, and I will put this link in the chat right now, the PSLF buyback program. This was introduced at the beginning of this year, somewhat quietly, because the Department of Ed was trying to encourage borrowers to hold off on utilizing this until after they had gone through what they called this sort of account adjustment review, where they were going to be giving people credit for periods of time, maybe when they weren't making a payment. But all to say that this was a program that made it so that borrowers who had reached that 120, but still needed to get who hadn't made a payment during certain periods of time, like because they were on a forbearance, they could go back and select the months that they wanted to buy back that credit. So in an example, we'll use this period right now, right? You're on Save, you've been forced into this forbearance. These months are not counting towards PSLF, but you're going to be, you should have been at reaching that 120 forgiveness, right? Maybe next month. When the next month comes around, you can utilize this buyback program to then buy back these couple of months and get credit towards that 120. So I will put, it's somewhat of a an intensive sort of overview and description of what you need to do in the process. And again, this is something that Savi is helping people with, but that is available, and that's what the Department of Ed is telling people, and what we're telling people as far as here's what you're going to be able to do so that you can get credit for those months. So I'm going to put this link right here in the chat about this buyback.
Okay, great. For people who are in the pay and it says ICR, I don't know if that's actually something or if it's a typo. Are they able to update changes and still be a part of it?
So it is ICR. So people who are
Okay.
in pay and ICR, you actually should. It will probably be. You probably will still see a monthly payment that you're making. You would not have been put onto an automatic forbearance or anything like that. However, if you wanted to change to a different income driven repayment plan, or you wanted to resubmit the application to have your monthly payment recalculated on pay or ICR, maybe because you've had a change in income, that would trigger that review and processing in which you'd likely be put into a processing forbearance for 60 days while they do that. But after that, you should be able um, to have a payment and continue with that program. But you'll be fine if you otherwise it's mostly if you're trying to submit an application to change into a different one or to change that monthly payment amount. That's what would potentially trigger and get sort of held up as they've delayed and paused processing on all new applications. That's sort of what that's considered. So otherwise, you would be fine and unaffected.
Okay. Um, so if the automated payment for IDR hasn't been stopped, what should a person do?
So if you have been on IBR, it wouldn't have been stopped. Because again, the only people who had their payments automatically stopped or were put automatically into this forbearance were people already enrolled in the SAVE plan. That was the only plan in which they had put because they couldn't continue implementing it as a result of the lawsuit. So it's the SAVE plan in which you were automatically put into a forbearance. If you were enrolled in another income-driven repayment plan, whether it be IBR, ICR, or pay, you would continue to see those monthly payments. And unless you are unable to afford that, you should continue making those payments and you'll continue to receive credit towards IDR and PSLF forgiveness. But otherwise, it's just impacting new enrollments into these programs. That would be someone who, again, if you're trying to enroll in that, you're going to be put into a processing forbearance and going to be delayed in your ability to get into that program. Hopefully that makes sense.
Okay. For the PSLF, if we are in forbearance due to the SAVE litigation, how does that impact the months counted for the PSLF timeframe? You may have
Yep.
discussed this, but
Yeah, no worries. It's worth, especially again, since I think, the attendees on today's session are, based on, the organizations that you all work for, which are likely, nonprofit and qualifying employers. PSLF is absolutely something that if you have student loans, you should be pursuing. And so yes, just to sort of recap here, if you were put into that forbearance because you were on SAVE, you are not accumulating credit towards PSLF for those months. However, because of that, the Department of Education is directing people to use what they're calling this buyback program. This was something they introduced at the beginning of the year, and borrowers will be able to sort of purchase or buy back these months right now that you're in forbearance to count as credits, and you'll purchase it for the amount that you would have had due under that plan. So if you owed $50 a month under the SAVE plan, right, when you buy back to that month to get credit, you'll pay $50, right, as you were supposed to normally, in order to get that credit. So you will be able to get credit for those months for PSLF. And
okay,
I put a link sort of with an overview of that buyback program in the chat as well.
great. Can Parent Plus loans in default be subject to Social Security garnishment?
So I mean, any federal loan in default can be subject to that garnishment. It is more so if you are receiving Social Security, right? So if you're not, or if you didn't receive a tax refund that year, okay, you won't have anything garnished off of that, right? If you are receiving Social Security, though, yes, it doesn't matter what loan type you have, Parent Plus loan, regular, a loan that you took out for yourself, doesn't matter. You can be subject to that.
Okay, just to clarify, does the default clock start over on October 1st, and how many days do they have before it goes into default?
Yeah, so the clock does start over, and you have usually 270 days before you are put into a default status. But they start reporting you delinquent, and you will see negative impacts on your credit report starting actually after 1 month, but it becomes a sort of an official report of delinquency after 90 days.
Okay. So if a borrower has not made a payment, thinking it isn't affecting their credit, and they decide to start making payments in September, will they be delinquent on all prior payments missed come September?
No, they won't be. So they won't be delinquent, and they will be able to enter into a repayment plan that will show their account as current. So the clock is starting over in October. Basically, that payment in October has to be made.
What if someone's payment under save was zero? How would the buyback work?
They would pay $0. That's the beauty of these $0 payments under income driven repayment, is that, especially if you're pursuing PSLF, right? That's the ideal situation, because, you're paying nothing and you're accumulating credit towards ultimate forgiveness. Really minimizing your monthly payment and maximizing that forgiveness. So yes, the buyback would work, that you pay $0.
Okay. We're going to go back to the PSLF and forbearance because somebody's like, sorry, but this is so confusing.
I know,
So,
I hear you.
so if payments were being made during the forbearance under the SAVE program, will they be applied to PSLF once the forbearance is lifted?
No. So, and in fact, so if you were in a forbearance, it would be impossible for a payment to have, they wouldn't have auto debited you, and you wouldn't have been able to make a payment sort of under that plan. You could have called your servicer to make sort of an ad hoc payment, right, towards your student loans, but it would not be applied or count under the SAVE plan, and it would not receive credit for PSLF. So because I've been asked this, have said, well, can I just, voluntarily make a payment? I know I'm in this forbearance, but what if I just choose to make a payment? Will that count? It will not, unfortunately. So that's not even worth it. In my opinion, save that money and put it towards the buyback, because that's actually going to get you back the credit. Any ad hoc voluntary payment is not going to, it will not, in fact. So, yeah, that's sort of the long and short of it. Hopefully that's clear. But again, I know that this is probably the most confusing, part of this. So happy to answer, more questions.
Okay. And so this is a question about the link to the Fresh Start program.
Mhm.
And the person just wants to know, what does it mean the borrower needs to opt in via phone with respective collection agency in order to enroll?
Yeah. So the collection agency that I'm sort of referring to is, uh, they, just like these servicers, Mohila, Navi, so on. They're contracted by the Department of Education, right, to collect on that debt. When a borrower goes into default, their loans are moved from whatever servicer they had, let's say Mohila. They're moved to sort of another collections agency, you can kind of call it, for collection and management. So they won't, even if they try to call the servicer they had, Mohila, they won't even be able to give them any information or do anything on their loans. Their loans are now with this other agency, and that, at this point, I believe it's sort of all one, or housed under one. And that is at this link, the myeddebt.ed.gov, and that is, anyone whose loans are with that, who have gone into default. They would have received an email communication letting them know, like, you can access your loans here. This is who's going to manage it going forward. But that's the entity, and that's the same phone number associated with that entity that they're going to need to contact to do this. So hopefully that makes sense. But that they should be able to, even if they go to that link and maybe have never set up their login account, they should be able to, for the first time, using, I think, they ask for like maybe your name or social, right? And they'll be able to verify it, and you can set up a login and you can do it from there, or you can just call.
Great. So this isn't really a question. I mean, it's kind of a question, but it's a sort of a statement. But this housing counselor is talking about how um, many student loan borrowers seem to not really be getting the benefit of higher income as a result of their education. And many of them are then also losing out on the ability to become a homeowner because of their student loan debt. So
Mm-hmm.
the kind of general question is, why aren't we having some kind of requirement for counseling prior to engaging in a student loan like we do some first-time home buyer programs? Not asking you to answer that question, Lindsay. I think I think that this is a sentiment probably felt by many housing counselors, and I just wanted to share that this person was kind of thinking along these lines and wondering,
No, and
pondering.
I think about that, all the time. And I'm so glad, because yes, that is, it's sort of a, how can we do something to prevent this, or at least, set people up for some a better outcome, earlier on, right, in this process. And while a lot of what I do or focus on it is what, once people already have the debt, right, okay, so that's there's nothing we can do about that. But I agree that before someone takes these loans out, having an understanding of what repayment could look like, what their options may be, and whether that makes it worth it or not, I think is incredible. And in fact, anything, one of the specific topics that I focus a lot on is, as far as you know getting people earlier in the process before they've taken the loans out, is you know having an understanding of, so for example, these parent plus loans, right? Many parents, it's the fastest growing demographic of student loan borrowers, ages 50 plus. So people think student debt is a young person's problem. What we're seeing is quite the opposite. And so 50, 60, 70-year-old people with over $100,000 of student loans that they've taken out for their child, because they think, I don't want my kid to have to pay for college, so I'm going to take out this loan in my name. Well, what unfortunately, these Parent Plus loans have the worst repayment and loan terms of all the federal loans out there. Congress sets the interest rates for Parent Plus loans this year, 9.5%. Compare that to about the 6.5 or 7% on it, as if the person or the child took the loan out in their name. The other thing is that these Parent Plus loans, even though it's for the child, it's in the parent's name and it can't be moved to the child. So it's as if it is this parent's loan. And so you have people who are taking on a huge amount of debt as they are trying to transition into retirement or on a limited income, right? And so not aware that they're not going to be able to really, their payment options and that future and are far limited compared to if their child took out the debt in their name and maybe they helped make some of those payments towards their student, their kid's debt. So that's I think a classic example of where, having those conversations with someone okay, maybe we need to take out the loan debt, fine, but let's do it this way, and not sort of, saddle yourself with these Parent Plus loans. But absolutely, how student debt impacts the ability to make other financial decisions, whether it be home ownership, whether it be other consumer debt, budgeting, et cetera, is super important. And I'm happy to, have separate conversations around. I've been thinking about trying to build out some type of training or certification that can be applicable across, whether it's housing counselors or mortgage lend, incorporating that into those conversations so that people are aware of what this can do and impact their choices going forward. So I think it's a great question, and anything we can do and I can do, personally, to assist you all in having those conversations, I'm happy to help.
So, one of the things that occurs to me is that it may be useful for housing counseling agencies to start thinking about including some little piece of this in their homebuyer education courses, or in their one-on-one sessions with folks. And somebody just kind of commented in the chat, Lindsay, and you may see it, that an 18-year-old doesn't have income and can't take out their own loans. But I don't think that that's actually the case. I
Right. Yeah. Well,
believe.
and that's probably at the crux of the student debt crisis is not, maybe not, unfortunately, but actually, you don't even need to be 18. I was 17 when I took out my federal student loans for my first year of college. That yes, people, again, who can be under 18, actually, are able to take out hundreds of thousands of dollars of federal student loan debt. This is specifically referring to federal student loans. The private student loans are, a sort of whole separate entity here. But they are able to take out those loans. And when it comes to taking out the loans, there are a couple different types in which income does not necessarily even play a factor. The Parent Plus loan ones, it's based on, a parent's income and the need. But for a just typical direct unsubsidized student loan, there's no income sort of requirement or need there. So it's yeah, it's crazy that is the case. But I also see, someone saying it's crazy that, schools push Parent Plus loans. And I completely agree, because it's, and on top of, with Parent Plus loans, as far as repayment options go, uh, and income driven repayment more specifically, you need to consolidate those Parent Plus loans in order to make them eligible for income driven repayment. And once consolidated, they're only eligible for one of those plans. So remember the four that we talked about? They're only eligible for one, which is ICR, the income contingent repayment. And that plan looks at 20% of your income to calculate the payment compared to the 10% or 5% of the other plans. So the payments are always going to be higher for Parent Plus loan borrowers. So not only do they have worse terms starting out, but then the repayment is made even more difficult. So again, yes, it's a situation where I, at least if I can, speak to someone beforehand, encourage them, against that. And the private loans, yes, I mean, they're not eligible for any of these programs. And so, they operate in an entirely different way. And yes, they push private loans a lot. And unfortunately, there's no such things as forbearances. And if you're struggling and can't make that payment, you have far less options available to you. Programs like PSLF, again, not eligible for private loans, right? So it's absolutely something that people should need to be aware of before making those huge financial decisions.
And then I don't know if you also saw in the chat, but just to reiterate about the parent student loans, I heard that after so many consecutive on-time payments on a Parent Plus loan that the parent was able to transfer it into their child's name. Is that true?
So that on a federal Parent Plus loan, that's not true. They are able to have, after so many payments on an income, on the ICR, income driven plan, they are able to have that loan forgiven after 20 years worth of payments, but not to ever have it transferred to the child's name. That is not, and has never been a part of on the federal Parent Plus loan side. They may be referring to a private Parent Plus loan that can be transferred, or I should say basically the co-signer can be removed. That parent can be removed after a certain period of time. That is true for many private loans that operate, that are taken out by parents for their child.
And that is the end of our questions. You can keep
Okay.
going now.
All right, sounds good. Okay, well, so the last sort of topic here that I just wanted to touch on before, we talk about how, Savi can be a powerful ally for you and your, communities through all these programs, is on some of the forgiveness initiatives underway right now, by the Department of Education. So if we can go to the next slide. All right. So the first thing I wanted to talk about was, what's happening with sort of this whole Biden forgiveness plan. If many of you remember, my gosh, time is flying by now, but, Biden had introduced a couple of years ago this initiative to cancel 10 to 20,000 of student loan debt, sort of across the board, based on an income qualification, for borrowers. There was an application that opened up, for about a month. People could, submit. People were approved, right, by the Department of Ed. They didn't receive the forgiveness yet, but they were approved. And then a lawsuit came through that challenged that. This case was brought to the Supreme Court, which, 2 springs ago ruled to strike it down, meaning that it would not be able to move forward. So that was sort of the last kind of big update around, President Biden's, broad-based forgiveness initiative. But since then, they have been trying to work to push through, some of this more broad scale forgiveness in other ways. And so their approach now is to try to target specific groups of borrowers that they want to try to implement this for, in hopes that, and they're pushing it through sort of in the regular rulemaking process, not by executive order, in hopes that they can get something through without it being challenged by a lawsuit. So here are sort of the specific groups that are being sort of targeted by this initiative. The first is borrowers who owe more now than they did at the start of repayment. This would be me. So meaning their balance, increased despite making payments over the years due to this sort of capitalized interest. So that's the one group. Another is borrowers who have been in repayment for decades, 20 years for their undergrad or 25 years for their grad. All right, being able to forgive that debt. Borrowers who are otherwise eligible for loan forgiveness but have not yet applied. So this would be someone who it would be eligible for IDR forgiveness but hasn't submitted their IDR form yet, or they went to a school that closed and they are eligible for discharge on those loans, but they haven't applied for that program either because they don't know about it, right? So the intention would be to because the Department of Ed can usually identify those borrowers on its own end, to be able to facilitate that process for a borrower and get them the forgiveness, without having to rely on them, applying or even knowing to apply for it. And the last group is borrowers who enrolled in low financial value programs. So programs that have failed the Department of Education standards, and therefore they are eligible to have those loans basically refunded as a result. So some a couple of these programs that exist, especially around school closure, low financial value programs, etc., are there's a high administrative burden. A lot of borrowers don't even know about it, and it's not like they're getting notices saying like, hey, you should be eligible to have your debt forgiven. The Department of Ed hasn't been proactive in doing that, and so part of this is if they're able to identify those borrowers and then just enact forgiveness across all of those borrower accounts, obviously that's going to make it a lot easier and more efficient to provide this relief. So these are sort of the targeted groups that they are working to identify, and the goal would be, again, to be able to provide this targeted relief and forgiveness to these groups of borrowers. It is currently in the process of sort of rulemaking where there's, they very sort of different stages. They issue recommendations. There's a comment period, et cetera, right? And are still sort of pending approval at this point. I would say, just based on what we've seen from, previous initiatives and efforts to try and enact, sort of broader based cancellation, even though this is sort of under these specific groups, I'm, confident that there probably will be legal challenges that try to prevent this from happening. And so, again, this is just sort of letting the administration is trying, to push through, forgiveness in other ways. But as of right now, this is still in process, and I'm not sure when we will see or hear an update on this, or the likelihood that it will, come to fruition. But again, there's something that, perhaps in the next administration will be the crux of what they try to push through. And then if we can go to the next slide, just the last bit here, on sort of new forgiveness updates, is as part of this sort of initiative, the Department of Education sent out a notice to student loan borrowers earlier this month, letting them know that, hey, here's what we're trying to do, right? We were hoping that this can happen, and giving borrowers until August 30th, the end of this month, tomorrow, to opt out of receiving this forgiveness. And borrowers who opt out cannot opt back in. Now, why did they give people the option to opt out of this forgiveness? Well, it was all sort of part of a legal strategy, because if you can give someone the opportunity to opt out, then they're hoping that will help them avoid some legal challenges around this being something that they implemented without someone's permission, right? So that there's no reason or any instance in which someone would want to opt out. This was more so something that they're doing to try to prevent future legal challenge on this. And so again, borrowers were all emailed at the beginning of August, about this and given that opportunity. And again, it's not official yet, and still sort of pending in this process. Forgiveness is absolutely not guaranteed. But this is what the Department of Education has proposed, around these forgiveness options, and is sort of waiting for final approval. So just as a heads up there. All right. And that is sort of it on the policy side. If we want to go to the next slide before uh I transition. Yep. I know we've taken quite a few pulse checks. But before I talk about sort of, how Savi can assist through all of this, any questions that I should touch on before we keep going?
Just one thing, are you receiving information about repayment status changing with the servicer transfer, i.e. from save to ICR with no notice?
Are you okay? So this person is receiving, or is the question, should you be receiving communication?
That's a good question. I read it to you as it's written, so I'm
Okay,
not
all right. Let me take a
sure.
look. Are you receiving payment status changing with the servicer transfers? Okay, so well, it sounds if they provided an example from save to ICR with no notice, unless you had submitted an application to explicitly change and enroll in ICR compared to save, that absolutely should not have happened. You should not have been moved to another plan. And when it comes to servicer transfers, um, so your loans transferred from one servicer to another, the status of your loans, whether being in repayment or in forbearance, should have remained the same. These servicers are supposed to be, implementing the same sort of guidance from the Department of Education across the board. However, I will say this: there's a big difference between what is supposed to happen and what these servicers are supposed to do versus what actually happens. And I would say we see issues with how servicers are processing or handling repayments, et cetera, about 50% of the time. And so this definitely there should have been no change. And so I'll talk about this when I talk about Savi, but we see this happen frequently. I'm not surprised. And so, we'd want to help you follow up with your servicer to address that issue, because that should not have happened. No.
And that's the only question.
Okay, cool. All right. Well, if we go to the next slide, then, so I I know that whether you have student loan debt or not, I think it's clear how sort of overwhelming and complicated the system can be. And while there are a lot of federal programs out there that are helpful, public service loan forgiveness is one of the longest standing and biggest forgiveness programs out there, signed into law October 2007 under the Bush administration, really bipartisan effort, right? It can forgive the remainder of that student loan balance. It's highly underutilized. About only 2 million people or so have even submitted an application or applied, compared to what we estimate about 15 million people who are eligible for that program. And the rules are constantly changing, right? So it can just leave you feeling lost, overwhelmed, not sure what the best option is, not sure what you should be doing or need to do. And again, I would just say this: the role of these servicers, these companies that borrowers have no choice but to interact with, because that's who's managing the collection of the debt. These servicers have been sued left and right. They've even been denied, funding from the Department of Education as a result of their mismanagement of these various programs. Mohila was sued, at the end of last year, and the Department of Ed withheld $2 million of their contract because it was revealed that they had not sent billing statements to 2 million people when the first bill was supposed to be due in October, and they were miscalculating payment amounts under income-driven repayment plans. I talked to borrowers who were supposed to be eligible for a $50 payment on Save, and they were auto debited $450 from their account on that first monthly payment. All to say that even the best intentioned programs, unfortunately, what we've seen is, as a result of these servicers really and the role that they play, borrowers are negatively impacted, oftentimes without them even knowing it. They just they think that the servicer must be right and that's what they have to pay, or they're not eligible. And so again, it just creates a state where there's misinformation, confusion, and a ton of noise, and it makes it almost impossible, for anyone in their right mind to know what they should be doing. And so if we can go to this next page, that's exactly sort of why we exist in this space. If you think of sort of borrowers on one side and these servicers on the other, Savi's sort of right in the middle. And our goal is to try and reduce the friction that many borrowers experience, over the course of that repayment, and to protect and advocate for them when necessary, and really sort of be that intermediary to ensure we hold servicers accountable, but that they're actually getting the outcome that they need. And so we help to make this sort of best path clear by showing borrowers a personalized repayment and forgiveness plan. So we ask a few simple questions, almost like a TurboTax for your student loans, right? To be able to then provide that person with a really clear understanding of, okay, here's what my options are. And then we continue to monitor for new programs and policy changes, as you've just seen in the last hour, and incorporate all of that into their Savi account. So that way, it's not on the borrower to be following everything in the news and trying to understand these lengthy explanations and articles and changes. What they can do is have faith in that what they're seeing through their Savi account and our communication to them accordingly is reflective of not only the latest updates, but how those might impact them personally. And so we can sort of be their trusted guide and go-to, for everything and anything student loans. And then we take it sort of a step further, because it's all fine and well to, show people their best options and say, okay, here's what you could apply for and be eligible for. It's another thing entirely to then submit those applications, going through that process and ensure that you actually cross the finish line. There's a huge administrative burden that I will tell you prevents most people from being successful. And so we offer borrowers the ability to upgrade to a premium plan at a low yearly cost that basically provides them with not only one-on-one support, personalized support, so access to our student loan experts at any point in time along the way. They get an email from their servicer saying something and they're not sure what it means or if they need to do anything. They can forward it right to their dedicated agent at Savi. We can say, nope, you're good, so they get access to that at any time. And we then take on all of the application and paperwork, all of that administrative burden for them. So we are submitting and processing, pre-filling all of this stuff to their servicers. And then they can monitor all of those active applications in one place from their Savi account. And we can monitor it with them to ensure that it's being processed correctly and in an appropriate amount of time. Perfect example, right, is someone's loans get transferred to another servicer and their payment amount changes, right? And they're not sure what to do. That's when they come to Savi, right? We get on a three-way call with their servicer, or we send an official letter to their servicer to correct. So we can help in any point in time, in any situation, to resolve something that might be going on. And if we can go to the next slide, we try to use technology to make it a really simple and intuitive process. So instead of having to fill out a bunch of different applications on your own, maybe one for repayment and one, a couple for PSLF, through Savi, we collect it all in one application, basically, what we call our Savi application. And from that, we're able to then, identify and fill out all the necessary forms that are needed for, these programs. And someone can do it, in about 10 minutes or less. So I'm going to sort of walk through with you now, just to give you sort of a sense and feel of what that experience, looks like, and how, borrowers can use the tool, just so you can get a better idea, of what this looks like. So if we can go to the next slide here. So when someone logs into their Savi account at any point in time, the first thing they see is their Savi dashboard. And this is sort of like mission control for everything Savi. And this is where they're going to be able to see the latest and tracking on any applications they have in progress, update their profile. They can invite friends or family, et cetera. So that's all sort of captured in one place here. If we go to the next slide. Speaking of inviting friends or family, it's student debt is something that I often say runs in families. If you have student loan debt, you are probably related to someone with student loan debt or know someone with student loan debt. And, we are trying to solve this crisis and want people to, with the information they've learned, with an access like Savi, we want them to help their broader community, friends, families, colleagues. And so they can do so and invite friends or family to Savi through their account. And if they invite 3 or more friends or family, they can actually receive a 50% off coupon code to use towards that premium sort of membership. And they get that right away. And the 3 emails that they put in, those people don't even need to do anything with Savi. They just by going through the motions of entering those in, they get a 50% off coupon code. So I think that's pretty great. And it would probably lower the yearly cost, to less than $10 or $20 a year, if that's the case, and is something that also can help other people, in their broader community. Also, if we keep going along here, so when they're ready to get started, or they're starting Savi for the first time, we're going to be asking them some questions, right? We're trying to collect this information to be able to provide that personalized recommendation and estimate. So, we ask them some questions around their family size, their tax filing status, their income, right? As we've discussed earlier, these are factors that come into play when trying to calculate things like an income-driven repayment plan, right? And what you'd be eligible for. If we can go to the next slide, we also ask about employment, because this is one of the biggest factors when it comes to eligibility for programs like public service loan forgiveness. So built into our tool, we have a database of all the public service loan forgiveness as well as teacher loan forgiveness eligible employers in the country. And so when someone starts typing in the name of their employer, it'll pop up from a drop-down menu. They'll be able to select it. And then we're going to ask some further clarifying questions. But again, we're going to be able to to detect eligibility from there. Now, with programs like public service loan forgiveness that are retroactive, right, we encourage people to not only enter their current employer, but any previous employers they might have had. So again, that's going to factor into how far along they are towards that forgiveness. You can see here, this is someone, right, with a couple different employers that they've entered in, and that are going to count, towards that forgiveness program. And then if we can go to the next slide, the last step in the process is really syncing their student loans. So we provide a loan sync through a technology called Plaid. It's used across financial application technologies these days. If you have a Venmo account, Cash App, you've used Plaid to sort of sync your accounts. What it allows you to do is to select your servicer. So let's say Navient in this case, enter in your Navient username and password credentials, and it's going to sync over a read-only snapshot of that loan data. So it's not giving us access or anything like that to change or whatever. It's just going to show us the loan type, the balance, the interest rate, the disbursement date, et cetera, right? These are all very important in our ability to then be able to provide that person with the most accurate estimate of what these payments, et cetera, are going to look like. And oftentimes, borrowers on average have about 5 to 6 different student loans, with different disbursement dates, interest rates, et cetera. Because when you take out student loans, it's not like the whole thing is dispersed in one lump sum right at the beginning, for your 4 years or so. It's dispersed over time, and those are each different and separate loans with different terms, et cetera. So something that borrowers are not going to know all of that off the top of their head. So this is an easier way for us to, get that information and get it accurately without it requiring a lot of onus on the borrower. Now, if someone does not want to sync, they can enter that information manually. So that, that's another option, but that loan sync, is makes it easy for them basically for us to see all that information. And then, so that's the last step. And if we go to the next slide here, that's when a borrower will see what those best options are. We call this our plan options page. So we're going to identify what we think could be their best option, but we're going to show them, if they have more eligible plans, we're going to show all of them to the borrower. But you'll see here, this is someone who is, eligible for SAVE, and they're going to see what that new monthly payment amount could be under the program, what that total payment over time looks like. So how much they will have paid in total by the time they have that loan, forgiven or paid off, how long until they'd be eligible for forgiveness. I mean, down to the year and month as to when that would happen, and how much in forgiveness they would be eligible to receive. They can expand below for more details and see this plan compared to others. For borrowers who aren't eligible for forgiveness, they're going to be able to see different options as far as here's what's going to get you the lowest monthly payment versus here's what's going to, pay this off the quickest versus here's how you're going to pay the least over time. all of that is captured again and totally personalized based on, the information they've entered into their Savi account. So it's at this point where the next steps are going to be enrolling in these programs, whether, into a new income driven repayment or, or in addition, public service loan forgiveness. And so that's where borrowers have the option to either continue on their own completely for free. If we can go to the next slide here, they can either continue completely for free under what's called our DIY plan. So anyone can, access Savi, start Savi, go through that process and see those options. Want that 100% for free. And we recognize that borrowers, can submit applications, on their own at no cost, and so we want to support that if they choose to do so. So under that DIY free option, we'll send them the PDFs with instructions, to so that they can submit and manage that on their own, or they can opt to upgrade to this sort of premium, what we call essential plan. And that's where we will take on all of that administrative burden for them and all the application processing. And they'll be able to basically, with the click of a button, do it all, and initiate that right from their account and manage it from there. And it gives them access to that one-on-one personalized support, with a dedicated agent at any point in time, through their Savi account, telephone, email, and chat as well. And so that is part of that essential plan. And I believe, I'm not sure, so the non-member pricing that you see on the screen right here is let's see here, Ali, correct me if I'm wrong. It's $60 a year
Yeah.
for non-members. That is already discounted for the NHRC broader community. Normally that essentially is, I believe, $90 for sort of retail clients that we have. So, that's $60 a year, 100% money back guarantee. So any point in time you can request a refund and receive it. And there's no sort of recurring or automatic billing here. It's you can decide when and if you want to upgrade, and it's, for that year. And you don't have to decide, when you start your Savi account, you can decide at any point. So that is the non-member price, and NHRC member organizations get an even deeper discount. And I know Ellie will be sending that specific link out to those organizations who are members. They get an even steeper discount than that on that membership. And you can also factor in the 50% off coupon code, which, if I'm doing the napkin math correctly, will really bring the price down for that essential service to next to nothing, which is pretty incredible, especially given some of the important deadlines coming up and borrowers who need to take action to change correct the course of their loans, for the future. So that's really incredible that they're going to be able to do that. And I think Ellie's been putting some links in the chat as well to access that. But so they can decide to upgrade to that. And if we go to the next slide, this is sort of what that premium level of service and experience kind of looks like. Just as an example here, you'll see on the left, this is someone with 3 different employers that are all eligible for public service loan forgiveness. And that means they're going to need to submit 3 employment certification forms. And with the click of a button, they're able to initiate the creation of those forms. We digitize all of this on our end, and we actually send it to their employers for them to collect those signatures properly. So they don't have to print anything out. They don't have to try to, track down someone from HR in an employer they worked for 10 years ago. We manage the whole process end to end. And on the right side here, you can see this is just an example of how we sort of pre-fill and digitize the income-driven repayment application. We have a great DocuSign integration that we've built in that someone can do this right from their phone and sign off, and then we review and submit it to their servicer on their behalf. And because of the way that we've set up these forms digitally, it prevents and eliminates any and all human error when someone submits these forms. And I'll say this, whether it's an income-driven repayment application or public service loan forgiveness form, they are rejected more than about 50 to 60% of the time because of clerical errors. And a borrower gets that rejection and thinks, I must not be eligible, when in fact it's because they filled the date wrong. They didn't use the right formatting for the date. I'm not kidding. They will reject because of that. So we've accounted for all these sort of hurdles that we've seen borrowers experience and issues and pain points to make it so that when we submit that application, we know it's going to get accepted, it's correct. And that's can be some, assurance for the borrower. And then on this next slide here, you'll see once those applications are in motion, right, or in progress, the borrower can track and see exactly what's going on right from their Savi account. So again, this is that same borrower example with 3 different PSLF forms and their income-driven repayment application, all tracked and managed right in one place. And they're sort of seeing or prompted as to what, if anything, they need to do, where it is in the process, right? You can see sort of zoomed in here, they're given kind of step-by-step, full transparency and visibility as to what's going on and what to expect. This, I will say, is probably one of the most frustrating things as a student loan borrower, is that lack of transparency and visibility into what is going on with your servicer, right? I submitted an application and didn't hear anything, or am I supposed to get a confirmation from them, or did I do it right, or I got rejected, right? Or how long should it take? That's a big one that we get all the time. If it's going 2 months and you haven't heard anything, we've built in triggers into this monitoring process, so that if that does happen, and it goes past a certain period of time, it's not on the borrower to be the one, accountable or responsible. It actually will automatically alert us, and we'll be able to reach out to the borrower and then the servicer with them to help address this, and make sure that it gets processed properly. So again, all these things that we've sort of built in to ensure that people reach the desired outcome and get to that finish line, because so many borrowers doing this on their own do not. And then on this next slide, last but not least here, is accessing our amazing customer support team. This is an internal team of student loan experts that I've trained personally, since I've been here. And you can access that support through your Savi account by clicking contact support. We have an incredible help center with interactive content, all of these programs that I've talked about, all of that stuff. If you are looking for guides, explanations, what have you, that's all captured there in that help center. And you can use that for yourself, your members. And then you can contact our team by sending them a message right from your Savi account. It says response time 3 to 5 days. I was just talking with our head of customer success, and he said we are now sort of anywhere between 12 to 24 hours responding to anyone who's reaching out. And if you call us, our wait time is 1.8 seconds before someone picks up. So we pride ourselves on being able to be accessible to borrowers, because we know how difficult it often is to get in touch with your servicer. You're on hold for 3+ hours and can't get an answer to your question. So they have access to that right from their Savi account. So on this last slide here, just to wrap things up again and recap kind of, some next steps, creating that Savi account just by sort of registering and even entering in some of that basic information, they'll be in our system, and that will allow them to start receiving, important student loan policy alerts. They'll have access to attend our weekly webinars where we talk about policy updates, things like that. So even just at a bare minimum, getting signed up and registered so that they can start, sort of receiving that information. And then of course, going through and, if the borrower decides to upgrade, to that essential premium service, they can really within 10-15 minutes get all those applications that they need, completed. And if they need help at any point along the way, can reach out, to our support team. And again, inviting 3 friends or family gets you a 50% off discount code on top of the already discounted essential premium price. So, to me, the value that you are getting for that, that type of price right now is incredible, and would seem a no-brainer, especially given everything that's going on in the student loan world right now. I feel like there's never been a more important time to have sort of an advocate, or an organization like ours, in your corner, and just, being responsible for making sure, borrowers are looked out for. So that's it from my end. Ellie and team, I can, if there are any other questions, happy to answer them. But appreciate all the time today.
Well, thanks so much, Lindsay. And just really quickly, somebody is wondering if Savi has any sway with CFPB to get them to take some kind of proactive action on the need for pre-student loan education by housing counselors. And then they are also wondering if Savi is an acronym, and if so, what does it stand for?
Great question. So on the CFPB, yes, we actively work with Department of Education and CFPB on and this is what I think is great about the way that we operate in elevating the concerns and issues that borrowers are experiencing, because we work so closely with borrowers and even just servicer issues, right? Will meet with them and let them know, hey, servicers are screwing up, in this way or another. But there is a specific department at the CFPB that oversees consumer education and engagement, and I'm happy to connect with this person to uh, to facilitate that conversation around whether it's setting up a conversation, but around these specific needs, because they're responsible for really trying to address these issues and working with local, state, et cetera, organizations, advocacy groups in the community that can be the sort of the conduits and the messengers around some of this. So absolutely would be happy to help facilitate that, because I agree. I think it's really, really important. And then Savi is not an acronym. It stands for a combination of savings and being savvy with those savings. So that's how we got to Savi. People sometimes think it's Savvy. I didn't pick it, but it's Savvy, but not an acronym.
Okay, so a couple of questions just come in. What are the hours for support? Any evenings or weekends?
You know what? Let me double check. Let me double check with our team on that for you right now, and I will hopefully get back before we close up. So let me ask our head of customer success so I can get right back to you.
Okay. And that is it for the questions. And you can go ahead and type into the chat anything more that you find out, Lindsay, as I hand it over to Bruce to close us out.